Hi, I'm Kalilah Reynolds, and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. So come on, let's get this money.
First up, no dividends from banks for the rest of the 2020 financial year. The announcement from the Bank of Jamaica caught many off guard. BOJ Governor Richard Byles explains why they took the decision. And later, the analysts weigh in on the latest market developments. We'll get reactions from our analysts about the suspension of dividends, plus with the auditors raising concerns about Icreate's future profitability, there's been a major shakeup of the company's board. And oil prices turned negative for the first time in history last week, with the U.S. benchmark West Texas Intermediate WTI trading as low as negative $40 a barrel. We'll discuss. But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart. The Bank of Jamaica, BOJ, has announced the suspension of all dividend payments by financial institutions for the 2020 financial year. The BOJ says it's consulted with the boards of the financial holding company FHC designates and deposit-taking institutions DTIs. It says they've come to a mutual understanding to suspend the distribution of profits by way of dividends in any manner, whether cash or stock, until further notice. The decision also affects unpaid dividends declared for the 2019 financial year. The central bank says it took the decision in order to conserve cash and enhance banks' capacity to lend and absorb losses. However, the BOJ maintains that banks have more than enough cash and the country's financial system remains strong. In addition, the central bank says it stands ready to provide more money and other support to ensure that financial institutions can continue to provide credit and other financial services to the public. Oil prices turned negative for the first time in history on April 20, with traders running out of storage space for the commodity that nobody wants to buy. Future contracts for May delivery of the U.S. benchmark West Texas Intermediate WTI tumbled to minus $37.63 a barrel on April 20. That meant traders were offering to pay almost $38 to anyone who could take the oil off their hands. The price of crude started rebounding the following day. However, it's still relatively cheap. At the end of the week, WTI was being sold for $16.94 U.S. Some analysts have described the dip in oil prices as technical with the way the contracts are written. However, some believe that prices could again hit below zero in the coming months. This glut in the global oil market is due to a price war between the world's biggest oil producers, Saudi Arabia and Russia, as well as worldwide lockdowns caused by COVID-19. Now, Finance Minister Dr. Nigel Clark says a team has been working on the possibility of hedging Jamaica's future oil supplies amidst the uncertainties in the sector. Hedging is a type of insurance which uses financial instruments or market strategies to offset the risk of high oil prices. Dr. Clark says the team is being supplied with daily prices of hedging instruments. However, they haven't been cheap in light of the challenging period. The minister says the Bank of Jamaica has been tasked to continue reviewing hedging options and prices and will advise the government on next steps. Still on the global scene, the World Bank says remittances sent home by migrants from low- and middle-income countries are expected to drop around 20% this year amid the global economic slowdown caused by COVID-19. The flow of remittances to poorer countries in Latin America and the Caribbean is expected to drop by 19.3%. Additionally, the World Bank projects foreign direct investment to developing countries will fall 35% this year. In related COVID-19 news, tighter restrictions have been implemented locally as efforts continue to contain the spread of the virus, with confirmed cases now brushing 300. The island-wide nightly curfew has been adjusted, as well as the opening hours for all businesses to facilitate travel time for staff. The lockdown in St. Catherine has also been extended, with more days allotted for shopping. On the flip side, calls continue to be made for the government to start reopening the economy, citing imminent chaos in the society if that's not done. In the meantime, a protocol has now been developed for the controlled re-entry of Jamaicans stranded overseas as borders remain closed. Meanwhile, people who applied for compassionate grants and set cash grants under the government's $10 billion CARE program are to start receiving their payouts by April 30. Applicants for those two categories started receiving notifications on the status of their applications on Friday. Both components account for more than 90% of the total applications received so far for the program, which is intended to assist citizens and businesses being impacted by COVID-19. In other news, Digicel Group Chairman Dennis O'Brien has put up the regional headquarters on the Kingston waterfront as collateral under a debt deal with bondholders. Digicel wants to shave as much as $1.7 billion off the $7 billion it owes bondholders by swapping out a series of bonds. The Digicel founder committed to putting up $50 million, half in cash and the rest in the building to sweeten the deal. The offer to bondholders closes on April 28 and has already received substantial take-up. However, some Jamaican holders of the bonds are among those still to make a decision. The offer comes a year after another round of refinancing, a transaction that saw nearly $2 billion of debt maturing this year being swapped for new notes due in 2022. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart.
When we come back, BOJ Governor Richard Byles explains the rationale behind the decision to suspend dividend payments by financial institutions until next year.
This segment of Taking Stock is brought to you by Bulwark Insurance Agent. Insurance made easy.
Welcome back to Taking Stock. Stock market investors were sent in a tizzy on Friday following news that dividends from financial institutions for the 2020 financial year will be suspended. The decision also affects unpaid dividends declared last year. Now, why has this decision been made? Governor of the Bank of Jamaica, Richard Byles, is here to explain. Explain what happened on Friday. Read dividends.
So recall that one of our main objectives, apart from inflation targeted, is financial stability. We need to keep the system stable. And one aspect of that is liquidity in the system. Now, as you know, along with many other central banks in Europe, United States, elsewhere, Far East, we've been putting quite a bit of liquidity in the system. Indeed, we have put nearly 60 billion of liquidity in the system.
And that just means cash. That just means money.
Yes, it means cash. In other words, we have bought securities from the financial institutions. And what this has done is put them in a pretty strong place in terms of liquidity. So I need to state right from the beginning, there is no problem with the current liquidity situation of the financial institutions. But we don't know how long this lockdown will last. We don't know how deep it will be. We don't know how slow the recovery will be. So as a matter of prudence, we took a decision to ask the deposit-taking institutions, banks, as well as building societies, financial holding companies, to postpone the outflow of liquidity by way of dividend. So under the Banking Act, if we have cause, we can say, no, don't pay dividend. But because there is no cause in this instance, we had to ask. And I must say, every one of the financial institutions was very accommodating in that respect. One or two of them, it was a little bit more complicated because they had either already declared a dividend or had given notice that they were going to declare a dividend. So there was a little complexity there. But even in those instances, those institutions came out in support. And I really appreciate that. It's similar to how they decided not to, when they gave back the asset tax, they have stepped forward again and said, we want to work with the central bank to maintain stability.
If you already have a check in the mail and you just haven't cashed it yet or deposited it yet, does that mean it won't be honored?
No, that's okay. That means that the dividend would have been paid out already. So this is for listed enterprises, financial holding companies who have not yet actually drawn the check and sent it out.
Okay, explain who all this affects, because there's been some confusion out there. People have been afraid that it affected all listed companies, but it's only financial institutions. Tell me which ones it applies to.
Well, I hope I don't miss any of them, but all of the listed financial institutions. So BNS, NCB, Sagicor, JMMB, Victoria Mutual.
Okay, so we have all banks, insurance companies too, yes?
Well, any financial holding company. So Sagicor.
What a financial holding company is.
Right. So Sagicor Financial, Sagicor Group, and NCB Group, they would have banks in them, security dealers, insurance companies. So it's a listed enterprise that we call the financial holding company.
Mm-hmm. What about brokerage firms?
No, it doesn't apply to any brokerage firm.
Remittance companies?
No, so long as those are within the holding company, they can always dividend within the company, but we don't want them to dividend outside of it. So let us say, for example, Western Union as a part of Grace Remittance, they can move dividends within the organization, but we're asking them not to move those dividends out of the financial holding company. This is just a postponement. As we go along and as we hopefully see a little light at the end of the tunnel in the near future, we will relax that request.
You said postponement, but speak to how long this is expected to last, because the press release said for the rest of the 2020 financial year, which would be until March 2021.
Well, Kalilah, I don't know how long this situation that we have with coronavirus will last. I don't know how deep it will be. There's been some talk recently internationally about what that recovery will look like. And more, I'm convinced that recovery will be elongated. It won't be V-shaped. And so we have to just be prudent and make sure that we don't do anything early on that puts us in a compromising position later on. So we'll take it week by week and see what the situation is like.
So even though the release says on the rest of the financial year, it may, if you determine in your assessment that these measures are no longer necessary, you may roll that back sooner than that.
Correct. Absolutely. Yes.
Okay. Does it also affect preference shares, or it's only ordinary shares?
It would also apply to preference shares. And a dividend payout that takes money out of the financial holding company.
What do you say to shareholders now, Mr. Byles, who were depending on these dividend checks? You might have a shareholder who's already lost his or her job. If they decide to cash out their stocks now, they'll be doing so at a major loss. And so dividends was kind of the last ray of hope, counting on that dividend check, and now, bam, that's gone too.
Well, if they had cashed out at a loss, there would be no dividend for them. But I know the point you're making. And, I feel it for them, yeah. But I prefer to protect the greater good, which is the depositors in the bank. What we don't want is depositors to go to financial institutions and they don't have the liquidity to give the depositor back their cash. And that is what we are just trying to safeguard going forward.
So it's more than protecting the ability to lend, but depositors' actual cash, just to take out your money from the ATM.
That's absolutely right. Correct.
Mm-hmm. How might this affect pension funds as well? Because pension funds, we know, are heavily invested in the stock market, in financial institutions as well, and they rely on dividends to pay out pensioners.
I don't know that a pension fund would be so dependent on dividends from these companies to pay pensioners. And remember, it's just a postponement. It may be for 3 months, 6 months, it may be for less. So it's not going to be, hopefully, for a very prolonged period.
Mm-hmm. There has been a point raised as well that some of these financial companies have foreign owners. You think of Scotia, you think of Sagicor, at least part foreign ownership. Was this done to protect or to prevent the repatriation of funds to their foreign owners that you want to keep particularly US dollars in Jamaica, since our supply has been so affected by loss of tourism, bauxite no longer being exported, and so on?
No, that was not the direct intention, though as a byproduct, I'm happy for that. But the intention was to keep Jamaican dollar liquidity within the financial holding company. That they don't pay the dividends out in US dollars is an added benefit. Though I must say, to the credit of some of the financial institutions, they have proposed that even if they paid the dividend to the foreign shareholder, they would hold it in Jamaican dollars for the time being. And then when the foreign exchange situation eased, they would then buy the foreign currency and pay it out. But we haven't got to that point, but I appreciate that gesture on their part.
You must be anticipating quite a fallout in US dollar supply, given the factors that I just mentioned.
Well, Kalilah, it's not anticipation, it's here already. We find that the market is down quite significantly, as you can imagine, with no tourism dollars, with remittance flows down 15 to 20%. The market is really stripped down. We at BOJ have had to come into the market, and we do so consistently and have done so over the last couple of weeks.
Well, how long can we afford to do that? How many weeks of imports do we have?
Our gross reserves would give us about 23 weeks of imports. Recall also that the Minister of Finance has made application to the IMF for rapid financing, and I believe that amounts to about 550 million US dollars. That's the application. I guess we'll hear from the IMF shortly, maybe next week. So that will be a big benefit and assistance to the market.
Mm-hmm. And 23 weeks would be about 5 months, so we're safe for a considerable period.
But remember, there are still some flows coming in. I mean, it's not like it's zero.
Right.
The market is short, maybe about 30 million for the week. So it's not that there's nothing coming in. It's just that the big flows from tourism are not coming in, and remittance is down. But remember, tourism also caused a lot of imports. Mm-hmm. So those imports have also gone away.
Mm-hmm. So we can expect to see in the coming days and weeks the value of the Jamaican dollar versus the US dollar go down quite significantly, wouldn't we?
Well, I don't want to anticipate that, and I certainly hope it doesn't happen. But if there is a shortage, it will. BOJ put out an indexed bond recently, I believe last week it came out. And what that did is allow Jamaicans to take Jamaican dollars and buy a bond that's indexed to the US dollar. And so that, I'm hoping, will take out some of the demand for US currency by individuals and corporations. So maybe somebody wanted to buy and hold a US dollar asset. Well, this is as good as that. And I'm hoping that will take some of the heat off of the foreign exchange market.
Before you go, though, I want to ask you to don a different hat for a couple of minutes. I didn't warn you about this question, but we have heard the news about Icreate and the shareholders resigning on Friday, a number of shareholders. We've seen the auditor's note issuing a warning about the future of the company. I know that you have been affiliated with them in the past, a former chairman of that company, run by young Tyrone Wilson. What advice would you have for him at this time?
Well, I mean, it came as a surprise to me. I resigned in 2017 and have not been in touch with Tyrone much since then. Like you, I read it in a newspaper. I'm disappointed because I know Tyrone has worked long and hard at this business. And I think shareholders need to, well, like every other company, they run the risk that the company is not successful and their shares are not worth anything. But Tyrone has worked long and hard, and it's a disappointment to me that this has happened. He needs to do the right thing, depending on the state of the company, and as far as possible, protect shareholders.
All right. Thanks for that note, Mr. Byles. Appreciate it. And when we come back, I've got your market recap, and the analysts are standing by.
This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy.
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange continued its decline last week, with a combined index falling nearly 2%. 97 stocks traded across both the main and junior markets of the JSE for the week ending Friday, April 24, 2020. 30 advanced, while 54 declined and 13 traded firm. 383 million shares changed hands on the Jamaican dollar market, totaling $945 million. QWI Investments traded the most, with 117 million shares changing hands. The stock gained 3 cents to open this week at 77 cents. Mailpack Group traded the second highest, taking up nearly 24% of market volume. The stock gained 12 cents to close last week at $1.65. And Trans-Jamaican Highway rounded out the volume leaders, with people buying and selling nearly 57 million shares in the company. Trans-Jamaican Highway gained 1 cent to close at $1.38. Turning to the top advancers now, led by Everything Fresh, which jumped nearly 26% to close the week at 83 cents. Key Insurance Company followed closely behind, with its share price jumping nearly 22%. The stock closed last week at $4.90. And to round off our top advancers, Lasco Manufacturing gained nearly 16%. Lasco ended the week at $3.89. On the losing side now, SSL Venture Capital Jamaica fell nearly 30% to close the week at 71 cents. Express Catering also took a hit, down nearly 18% to end last week at $3.08. And MPC Caribbean Clean Energy fell nearly 17%, down to $147. Market Recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, the Analysts, is brought to you by Jamaica Money Market Brokers and Proven Wealth. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. We're joined by Group Sovereign Research Analyst at JMMB, Theodore Mitchell. Research and Strategy Analyst at Sagicor Investments, Jodian Aris. And investor and host of the Earnings Season podcast, Randy Rowe. Later on, we'll also be joined by young investor at the University of the West Indies, UWI, David Rose. Thanks for joining me, Theodore. Jodian, so much to discuss this week. And amid all that's happening with coronavirus and stay at home and all these various things, let's start with what's been going on the commodities market, particularly oil prices last week, hitting negative values. Theodore, what's your analysis?
Essentially, what we saw was oil price hitting negative for 1 day, futures market 1 month. Notably, this has to do with excess supply on the world market, We saw today where it is that prices returning to positive, and we're expecting price to remain in the positive at least for another couple of weeks. We're not expecting any change. We do, however, expect price to remain structurally low, given what is happening with respect to OPEC as well as the issues surrounding OPEC and Russia, that is.
Jodian, I don't know if you over there at Sagicor, if any of your clients have exposure to this market, what do you tell them to do at this time? How do we take advantage of this?
Just to agree with Theodore, it's really the supply issue, and they have decided to cut production, so that should really ease as we go forward. So we're trying to make sure that demand and supply try to find that meeting. For persons who already have exposure to oil, you just really have to watch and see what will happen further in the market, because we do anticipate that once there's a recovery, then the demand for oil will come back to fore. However, there is going to be some adjustments that these production companies will have to make, because if it is that you're not producing because airlines are out and shipping cruise lines are down, then there could very well be some impact to your bottom line, even though you can produce oil and it's not a perishable good, so it can stay for a while, but we're having issues with storage. And so those are things that you'd have to take into consideration. I wouldn't necessarily say to jump in right away, but to give it a little bit more time and watch, because we need production levels to be a little bit lower. Even though they have agreed to cut, we need to see how much it is that they're really going to cut by and where that goes from there.
Mm-hmm. So Theodore, how does this affect us here in Jamaica, the crashing of the oil market and very, very low oil prices?
Of course, it will take some time before it resonates locally. If you may recall our previous discussion, Petrojam controls roughly 70% of the market, and to the extent that they determine prices, the other players in the market follow. So despite the low price that we're seeing in the global market, a lot will determine, Petrojam to a large extent will determine what happened locally. We do expect some amount of pass-through with respect to prices. We did see what transpired just this week with respect to the minister making statement regarding Petrojam pricing, and we saw where it is that upwards of $41 was added to the price. So it is that notwithstanding the low price which we are seeing, everything very much depend on Petrojam. And should indeed we feel the pass-through effect, then it would resonate in terms of the cost of transportation, price of fuel at the pumps. It should also resonate with respect to electricity prices. So in general, we should feel a positive impact in terms of lower prices in the economy as a result of the low oil prices.
The critical point there being we should.
Indeed. As I indicated, a lot depend on Petrojam because they are somewhat of a monopoly. So to the extent that they determine prices, that will to a large extent determine the pass-through effect of the lower world prices to individual consumers.
Mm-hmm. All right, so I see Randy has now joined the chat. Hi, Randy. Good to have you on.
Hey guys.
Been a minute. You look like you're well cooped up in quarantine, though.
The COVID hairstyle, COVID life.
Times like these, people like you get excited. I've been listening to your podcast. You guys check out everymickle.com and check out the podcast earnings season. Really good content there. Mm-hmm. So we've been talking just now before you came on about the crash in the oil market, oil prices. Let me hear your thoughts on that.
I mean, I think it's just a regular functioning of the oil market.
A regular functioning, going to negative prices, it's never happened before. That's not regular.
It's regular functioning. It's like if a car is meant to function in one way, if you rev it up and drive it into a wall, it's going to crash, right? The oil market just happened to have a confluence of factors over the past few months that resulted in the near-term oil deliveries being worth almost nothing. Like, we'll pay you just to take it from us. Mm-hmm. And I think that's just why you had negative prices. And it's negative prices on the most recent deliveries. So that literally is just a function of them saying, listen, we have more oil right now than we have space to put it. And that's a worldwide phenomenon. I gather that even in Jamaica, we're running out of space to store oil. So at this point, we have a glut of something that we usually have too much of. I say it's regular functioning because everybody I know who is, or I see who is associated with the market, is treating it in regular ways and responding to it in regular ways. We see even President Trump.
What are the regular ways? Because this has never happened before, so I don't even know how to interpret regular ways for something that is irregular, that has never happened before.
Well, the price might not have happened before, but the functioning of the market continues to do. It's like when you're tracking a stock, when the stock reaches its 52-week high, it's never been there before. If it reaches an all-time high, it's never been there before, but it doesn't mean that the stock itself or the market isn't functioning how it should. And I said that because the responses to it have also been the same. The US had a huge part in bringing oil prices down over the last few years because they took back their status as a swing trader. And you see now where the US is if you think of it as a person, well, in this case, President Trump has responded in usual Trump fashion to address the oil prices. I think yesterday he did one of his crazy tweets about Iran and the army being able to attack them if they bother them. I mean, nobody's going to bother the U.S. Army, especially not Iran. But he knew why he did that, and we saw the result of it. Immediately, oil prices trended up, which is what he needed to do.
What do you guys think of what's going on with this discussion about closing the economy or opening the economy? I saw a letter by Jamaican Tea's CEO John Mahfood, full-page advertorial in both newspapers last week saying, open back the economy, which I don't know that it's been closed, but there's that debate going on in the United States as well. When do we reopen? When do we close? To what extent do we close? Theodore, let me hear you on that, your thoughts.
Well, to the best of my knowledge, the Jamaican economy remains open. What has happened is that the borders have been closed, and we see recently where it is that the government has taken the step to restrict movement or institute a curfew in St. Catherine region owing to a spike in COVID cases. I was looking at some statistics recently, and I saw where it is that the number of deaths in New York City per 1 million reaches 540 versus California of 7 per 1 million. Now, if Jamaica should reach that sort of situation as with New York, where it is that the number of deaths should spike, it would have significant ramification, not just for the population at large, but for the healthcare system. Before you even get to the death, you're talking about morbidity rate in terms of number of persons being sick and the healthcare system being overwhelmed. So I think the government has taken a proactive step in terms of curtailing movements and with a view of limiting the number of persons that are infected, with a view, of course, of rationalizing the use of the healthcare system, because as you are aware, our healthcare system is already underfunded. So if it is that you should have a significant increase in the number of cases, then that could redound negatively. For persons who are ill, we may reach a point where we will have to determine who gets a ventilator versus who do not. And I suppose it is that we don't want to reach that situation. So at this point in time, what the government has done essentially is to limit movement with a view, of course, of bending the curve in terms of limiting the number of persons who are infected.
Jodian, you think the government is handling the situation well?
It's a tough situation for every government to be in. You want to try and find that balance between keeping the economy open while still protecting your citizens, and how best is that you do that and protect your vulnerable individuals at best. When you think of persons who are close to poverty line or below the poverty line, if it is that you close the economy, then those persons suffer the most because they don't necessarily have savings to carry them through, and they are more dependent on day-to-day living. But on the same end, if it is that you probably go with a herding method, then those persons are also going to be the most affected because they don't have as great access to healthcare and treatment. And it really is a tough decision to make, how it is that we balance, how it is that we protect everybody, but yet still keep businesses going. Because if it is that you close the economy totally, then how is it that persons are able to pay the employees? But it is that is going to happen. And so I think the balance that they have found is it's a working process. So I mean, it's never happened before. It's a novel virus. We're not sure. We're learning more about it as we go along. And so I think this approach where we try and keep it open to a certain extent, and where you have the incidences of high transmission or more cases, then you try and isolate and lock down those areas is as best as method as they could possibly do, I think, at this point in time.
Randy, I saw a message that was going around on WhatsApp. It's being credited to Ugandan President Yoweri Museveni. I don't know if he was the one who really said it or wrote it, because, fake news, but either way, it's a strong point. And the point that was being made in the message going around was that you have to treat this like a war. We're at war with the coronavirus, at war trying to save our own lives. And during times of war, you don't worry about your business closing, you're worried about your life. You don't worry about children not being in school, you worry about your life. That is the most important thing in a time of war. Do you think that's a fair point?
I think it's a nice sounding point. And I think if you become president of a country, you know what to say that sounds nice to people. The reality, however, is a little different. If you look through history, war is always concerned with money, it's always concerned with industry, it's always concerned with the economy. And bringing it, not that he's wrong, we humanity are at war with a virus, but we humanity have always been at war with viruses. And how we've responded to them has always been in a way that allows, whatever the path is that allows us to continue our normal lives and upward movement of the entire race, is the thing that has always been considered victorious. Now, bringing it back to John Mahfoud's point, I saw the full page ad also, and when I saw it, I was talking to a couple of my friends. I was talking to also Danai, who hosts a podcast with me. I saying he is exceedingly brave to say this, because in many respects he's correct, but there's time and place, and I understand why he's saying it, because John Mahfoud obviously is one of the principals behind Jamaica Teas,
right,
which supermarkets and distribution of food supplies, so on, in Jamaica and the US. Obviously, he would be affected very quickly by any slowdown in economic activity. So, the person who feels the pinch first squeals loudest. And I think a lot of that is driving it. So I think he's brave, because I'll be honest, I don't know that he's completely wrong. But I also know that sometimes you don't give all the bad news right up front. Just to complement Jodian's point, John saying that economy needs to be opened up is true, but also how we open up is going to be very, 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 very important. We can't just say, let's just open up, because the truth is, it is a terrible virus, and Jamaica is limited in its resources. On the other hand, she's also right in that Jamaica has people who live day to day. You have people who go out every single day and hustle the money to eat for that day. And those people simply can't be locked down. We can't feed them all. They have to feed themselves. And the companies that create and the people who sell the food that those same people eat every day to day need the money to be made. So it really is a tough position to be in. And I think Mr. Mahfoud has chosen to be the brave person who goes up front and says it early.
That's what a lot of people are thinking, but wouldn't say.
Exactly. And a lot of people know, because it's only a matter of time before we can't all stay home. We have to get paid. Right? Where the food can't run out all the time. The supermarkets have to sell also, or the supermarkets will close. So it really is a tough situation. I'm happy that he said it, and I'm surprised that he said it so early, but I would not want to be in government right now to have to make these decisions. It's a rough decision.
It's a very tough time to be a leader indeed. So Theodore, talk to me about what you've been seeing on the local markets this week. Any reaction to whatever has been going on internationally and locally?
Not much has been happening locally. As you're aware, you have seen where it is that local markets essentially is in the doldrum because of, the coronavirus. There's ebbs and flow in terms of, movements in local stock prices. On the overseas market, we have seen, most of the activities in terms of oil prices, in terms of, the futures market, we see prices going negative. But when it is that you look at the longer tenure regarding futures market, those prices were indeed positive. The long-term outlook, we got news from the IMF indicating that it's possible that the world economy will decline by around 5.4% in 2020. And with the prospect of growth of 3.4% in 2021, but that is predicated on normalization of activities in the second half of the year. From where we sit, we don't necessarily see economic activity normalizing in the second half of the year. We look to the north and we see what is happening. The incident of spread of coronavirus is increasing in some of the states in the US. In Europe, it is not yet under control. And other parts of the globe where it is the major economies. Looking at the source countries where Jamaica received tourism, remittance flow, those countries are feeling the hit right now. And I don't necessarily see those economies normalizing anytime soon. So it is that at best, it may be late December, early January before we have normalization of some semblance of normality. But a lot will resound around whether or not we find a cure, because if not, and there is, reduction in terms of the rate of infection, then the possibility does exist for there to be new cases, and then we revert to the same situation as we are at this point in time. So, the situation is fluid, and at this point in time, we see where it is that, there's lull in terms of overall global market activity as well as domestic market activity, but notwithstanding the lull, there are opportunities therein.
Mm-hmm. Jodian, what did you observe about the local markets this week? Anything in particular?
I agree with Theodore. Nothing much happening on local markets. I think there probably was a slight uptick in some prices, but not at great volumes. What has happened for local markets is that we have priced in as much as we know already. And so we do have an expectation for what is going to happen in terms of the impact it will have on the financials or listed companies. And based on the fact that we don't necessarily know anymore, or new cases are rising at a acceptable or what we think would have been a decent level, there is not much that is happening that you can necessarily think to price in or to necessarily make a move. I think persons are still doing the watch and see to see how far it is that this could go. Knowing that the government has done some of their programs already, I think that would have helped to ease how it is that persons are thinking and preparing for the future or for what it is that could come in the latter half of this year. I think when it is that results come out, we'll see a little bit more activity. It could be that prices go a little bit further downward, because it's one thing, I think, on a psychological level to know that the profit line for companies are going to dip, but when you actually see it happening, so I mean, in your mind, you may think a best case scenario of 15% and you price that in from now. But when it is that the results actually come out and you see things dipping 50%, 60%, it takes a different level from what it is when you see it in reality. So persons are really doing the watch and wait, I think, what's happening on the local market to see if there's anything further to come and how it is that others are responding, whether it is that try to take some buy or if it is that the market starts to go further and a lot of people coming out, then you could see more activity.
Mm-hmm. Randy, are people still panicking like they were 3-4 weeks ago?
I think that they are in that panic pause, I'd call it. The panic, sell. But you can't, human beings, we can't panic forever. So pause, and I think they're looking for really another reason to panic or a reason for hope. So I think over the next week or two, a lot of people might be given one or two of those reasons. As usual, that's the mass market. And like with the Pareto principle, there is a small amount of the market that has been making a lot of moves quietly while people are all waiting. And you see some of the majors moving very, very quickly and positioning themselves. Some of the mergers that have happened in the past few weeks, I think, are coming to fruition now. And a lot of bigger moves I expect a lot of people hear about over the next few weeks as results come out, especially within some of the sectors that I think are going to blow up. So I'm actually hopeful that when a lot of people realize a lot of what has taken place over the past few months while everybody was panicking, they will be surprised. A new normal is really about to emerge on the markets.
What sectors are those that you think are going to blow up?
I'm holding that one close to my chest for now. Holding that one very close to my chest for now.
You're keeping that one for earnings season?
I am keeping that one for earnings season and a few other articles, but the local sectors are going to blow up. And we see there are hints of it out there, especially in the finance sector. It's very obvious that a lot of people have been moving. And regionally also, we have seen where a lot of companies, local companies also have been moving and growing. So I expect the next few weeks to be very interesting. And I'm open. Well, I've said the banking sector is going to start the rise. I believe JMMB is going to surprise a lot of people, I believe, in the next few weeks. And you're going to hear a lot more from them and other players in that space.
Interesting. I want to thank you all for joining me. So we had already wrapped our show when news broke about the Bank of Jamaica's decision to suspend dividends, and I had to reach out to the analysts again for a reaction. I was able to get young UWI investor David Rose. Hey, David.
Hi, Kalilah.
Thanks for joining me at the last minute. What was your initial reaction when you heard that news?
No, I had to just check and say, whoa, and just go back to the release. And then even Jodian explained that the financial holding companies / intermediaries that own these DTIs would be affected as well. So I was saying, I'm not necessarily surprised to that extent that there was some sort of requirement, as you would say, by the BOJ, but I expected there to be a reduction in dividend payments. So, for example, Mayberry actually reduced their dividend payments by half, 50%. So last year they paid 25 cents per share. This year they're paying only 0.125 cents per share. So, and Sagicor themselves had actually declared 79 cents last year and are only expected to pay or declare dividends of 40 cents this year. So the reduction was coming, in my opinion, as relates to conserving cash.
And they reduced those dividends because of COVID-19?
More than likely, because they're really and truly right now trying to conserve cash and preserve liquidity, because one does not know how long this situation is going to last and the far-reaching effect it will have on their business operations. Sagicor said that under their stress test scenarios, they still remain profitable going all the way to the end of the financial year, but they still took precautions just to ensure that they could continue to rescue any subsidiary or division in case anything happens, because we are in uncharted waters.
So companies, in your opinion, would have already started doing this of their own volition because it just makes sense to try to preserve some of that cash.
Especially for the DTIs, because I did a third recently looking at the composition or distribution of how the DTIs, and for those wondering, a DTI is a deposit-taking institution and a FHC is a financial holding company. So when I look back at them, NCB, about half of their loans are directed to personal, and when you factor in distribution and tourism, it comes up to around 70% of their overall total loan books. So and when you look at other financial companies, almost half of each company's loans and advances is made up in some form of personal and a mixture of distribution / tourism. So when you consider the fact that they're making so much loan deferrals and the fact that as cash flow is not coming into them at this current time, there is a need, as you would say, to preserve capital to plan for any potential event that you might not expect, because the BOJ said that the banks are well capitalized, can remain profitable, but you don't know what might happen. There can be a bank run, some assets might fail, you don't know.
How do you think that the market might react to this news?
For the large investors, they would have no problem in this situation, considering that some of them already had secondary means of income, other provisions as to cover their bills and other expenses that they may need for the rest of the year. But those who use their dividend income as their pension, as you would call it, they're going to feel it. And some of them might need to actually sell some of their stocks as a way to preserve, or I should say, build up some liquidity going for the next couple of months, because as I said, you have some investors who actually get like 120 grand every 3 months from an NCB or a Scotia group, and that's what they take as their pension, because for some of them, the government pension isn't much, and currently probably pay one bill. Every income they get covers everything. So right now, some person might sell their stocks to get that liquidity for one to preserve value, and also, prepare for unforeseen times.
Do you think we're likely to see a lot of activity on the market on Monday? People shedding some of the financial stocks?
Potentially, but I wouldn't say it's guaranteed, considering that sometimes even though it might come out today, it might take probably a couple of days before the market really and truly wakes up to the whole reality. Because the market did have a mass sell-off in March due to the whole Jamiaca and the whole COVID fears. But really and truly, to anticipate or say that a potential sell-off might come on Monday would be premature right now until you actually factor in things. So for those who are looking at companies' viability with these dividends cut off, they might say, I need to take the high road now and get out before there's a potential significant decline in the price of the stock. But for other persons, they may need to evaluate and say, all right, I'm not making this dividend payment. What else can I use to supplement income to take care of the bills? Or, so there might be a decline in certain companies, such as the financial companies like Select F or like a QWI, where dividend income along with potentially interest income would be their main sources of income, other than like sales of services or goods. So they may see a sell-off, but other companies would potentially not see anything so significant.
Mm-hmm. Let's talk about another topic that broke late on Friday, Icreate. We were talking about this just last week on Taking Stock as well. Now, 4 of their directors have resigned. Is 6?
Yes.
The directors resigned and they're restructuring the company. What does that spell to you, David?
Well, we already knew the Icreate's financials coming from the unaudited and then going into audited, which showed the stations are a lot worse than it actually was. And to see this restructuring spells 2 things. It spells that, one, they're trying to be nimble right now to conserve as much cash as they can, considering that at the end of 2019, they had a very low cash position, and they ended up taking a bond with Sagicor to the tune of $24 million to support working capital. And then secondly, it also speaks to the reality that the company is in a very tight position, because the fact that they've really got to have the general manager and several other internal positions other than just the members of the board says that they're really trying to save some cash. And they've said that in a release that they've got 2 new directors. They've also trying to find a new mentor for the board based on the general market rules. But just the whole 6 directors going, that's basically 67% of the directors gone over a period of 2 weeks, 2 to 3 weeks. And then the resignation of Sophia Harris, the general manager, along with the CFO, I believe it was, that just says they're in some serious situation right now where they're trying to just survive.
I really feel it for Tyrone because, we have a relationship. They've been a sponsor of this program for quite some time, pre-COVID, when we used to record at their studios, and now things are just changing so rapidly. It's quite unfortunate. But do you think it could be construed as, is it trouble within the organization, that perhaps it's a lack of confidence by the directors why they're resigning? Any clue in that regard?
I couldn't tell, because some of those directors and even the company secretary, I've met them directly, and I don't necessarily believe that they would just resign prematurely, especially considering that some of the related parties some of the members of the board were, as you would say, shareholder representatives. So I wouldn't consider that it's just, they have not necessarily confidence, but it can be construed as one way, since some directors were saying a potential to step back and give the company more space, or somebody needs to take over if anything. But it's really a very tricky character to play. As I said, low on cash, heavy receivables. They're regular main operations between Montego Bay and Kingston severely impacted. So, and the whole chopping of the internal executives, as you would call them, senior managers, that's just unprecedented.
Yeah, so thanks for joining me, David.
Thanks again. Always glad to be on.
All right, good. Let's take our final break. This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers and Proven Wealth. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also, check out my other features, Money Mondays JA. This week, I've gone over some of the issues regarding dividend payments and broken down some of the terms you would have been hearing in this episode. On Money Moves JA, I'm joined by an attorney at law who explains how to keep your company compliant with its legal obligations despite the challenges we're all facing now. And then What's in it for me? I break down the issues in the oil market and why now might be a good time to hedge. If you don't know what that means, I also explain. Follow me on Instagram and Twitter at Kalilah Ray. If you want to connect with the analysts this week, check the description box below for their contact information. And tell a friend about Taking Stock. Investing is the new sexy, so let's make it cool to talk about money. I'm Kalilah Reynolds. Stay safe.